Tesla and the broader market have both enjoyed a shift in the narrative. Cathie Wood says we're now in a new bull market, and the S&P has signaled exactly that fact. Tesla has broken through all resistance barriers, and even the mainstream press has changed its mind. Hi, this is Randy Kirk. We're going to be talking about that and so much more today. If you like this kind of content that we provide on Wednesday afternoon about financial issues, broad financial issues, as well as Tesla stock issues, then please hit the like button, hit the subscribe, and you definitely want to hit notify right now, because tomorrow morning I'm going to do a broad, deep analysis of everything that's taking place right now in the macro and in Tesla stock. I'm going to go as deep as I've ever gone. I think you're going to like it. Hit down there if you'd like to hear more about that. And then, of course, joining Patreon would be great. You can find information about that in the information below. Anyway, well, okay, Tesla hit over 230 today. It's profit taking. I could have told you there was going to be profit taking. Maybe I even did. This market and Tesla have gotten a little out ahead of their skis right now, and so it wasn't shocking to see Tesla pull back a little bit from that 230 high, but it still closed for the ninth day in a row. It closed positive at 224.5. Now that has been a run all the way from 101 or 100. I forget exactly the number. That's 124% gain since the low, what I'm going to call the 2022 low. And that's even a 36% increase from the 165 recent low in April. It's like 5-6 weeks ago, we were at 165. Now we're at 224, and we were size 230 today. Well, for almost any other stock, that could seem really frothy. And there was profit taking, as I mentioned, but you know what? There's a lot of money coming off the sidelines right now. And it doesn't want to be left out of the next big move. And the next big move is going to be Tesla. I think everybody understands that now. And of course, I've been saying 300 by the end of the third quarter, 400 by the end of the first quarter of next year. And I think maybe the 300 is going to come a lot sooner than I thought it was going to come. I thought we'd need third quarter earnings to get there. I'm beginning to think that's not true. In fact, third quarter earnings might be the thing that starts to propel us back to all-time highs. And then first quarter earnings next year will be the thing that will propel us beyond all-time highs up to the 400 level. All right. So yes, the NASDAQ ran out of steam today. Profit taking came in. And as a result, you had the Dow and the NASDAQ switching places today, with the Dow up and the NASDAQ down. Now, that's happened a couple of times so far this year, but for the most part, the NASDAQ has been outstripping the Dow all year long. And that's because the world is changing. It's no longer an industrial world. It is an information world. It is a productivity world. It is a world that's going to be driven by technology, AI, and it's going to cross everything. It's going to cross manufacturing, services, construction, government. I don't care what you're talking about. This new technology that's coming in now is going to be across everything. And Tesla, of course, is well poised for both the AI side in general and for the specific category of robotics, which is going to be the mind blower of all time. All right. So the NASDAQ was down. I don't think that's going to stay. Well, not to say that it couldn't have another day or two of a little rotation out of NASDAQ and into the Dow, into this S&P, but the S&P is doing well also. It broke into bull territory today based on some of the ways that people look at these things. Cathie Wood is saying the bull started back in January. I tend to agree with Cathie. If you look at the numbers, it looks like that's when the bull started. But in terms of the way that some people calculate it, you have to hit certain criteria before you're in a bull, and the S&P hit those numbers either today or yesterday. So we have a massive run up. We've got a little sell off right now in terms of the NASDAQ, in terms of, again, Tesla didn't sell off. It just sold off from its high of the day. So I'm saying, I started out by saying that there's two new narratives. I spent a tremendous amount of time about 2 weeks ago talking about the new Tesla narrative That's a lot of what I'm going to talk about again tomorrow morning, because that narrative is still shifting. It's still trying to get a hold of what it actually is, but we'll talk about that in great detail tomorrow and a little bit of detail here. So, but you've got a new narrative. Um, the broader market now, I think, is beginning to believe that inflation is solved or nearly solved. Okay. You see that oil prices are staying down and staying down. All the commodities except for gold and silver are down and staying down. This is across the board. Commercial transport costs are down and staying down. Now, you're also seeing commercial transport actually down in revenues right now, not just down in cost, down in truckloads and tonnage. And I don't expect that to continue. I don't think that's going to be that leading indicator that I've been talking about so much before. It could. We could see some softness in this second and third quarter, but overall, I think we're not going to see any softness at all. I think we're going to see an economy that starts to improve. Again, I'll be talking a lot more about that tomorrow. So if you've got oil staying down, which is the biggest driver of inflation across all markets, if you've got the money supply down, which is the actual reason for inflation, you've got the interest rates holding the overall markets in place. All in all, that would suggest that inflation should be down. I did a video this morning. If you didn't watch the video this morning on Trueflation, can I tell you something? Go watch the video I did this morning on Trueflation. Learn about Trueflation, learn how to use Trueflation. It is a great way for you to be able to be better at predicting where inflation is heading. Trueflation says that inflation is now under 3% and about 2.8, I think, percent right now. And so if it's under 3%, the inflation problem is over. And I think the market gets that. I think it gets it intrinsically because, no matter how much you study it, you go to the grocery store, you go to the gas station, you go to the restaurant, you're not seeing these big year-over-year increases that you were seeing. You're not being shocked by the current pricing. I realized that this morning. I was thinking about traveling next year, and I was thinking, $100 a night for a hotel room is now kind of cheap. Would have never thought that before, but now, so yeah, got to figure $100 a night minimum, and it's probably going to be more than that. So I think we're starting to see that the inflation thing is through. I think the market is getting that, and that is when that thinking changes. Okay, that's what the Fed's worried about. The Fed was worried about an inflation expectation that would be built into employees expecting 4 or 5, 6% raises every year. Customers beginning to expect that the cost of a product they're going to receive is going to go up 10% every year. I mean, those are inflation expectations. That's the big enemy. I think that's over. If the Fed thinks that's over, then we got no more increases coming. The market believes that. The market believes, okay, maybe there'll be an increase in June, but then not in July. Maybe there'll be no increase in June, maybe an increase in July, but maybe no more increases at all. And still hoping for some decrease in these interest rates by the end of the year. That might still be a pipe dream, but if that's what the market sees, then that's how the market responds. And the Fed, they're going to see the same thing at some point, even if they haven't seen it yet. So they also know that I think the market also gets this whole AI and tech thing is going to drive up efficiencies. And everybody knows that if you get more efficiencies, then you get to lower costs. If you lower costs, you're going to lower prices. Kathy Wood believes we're going to go into deflation because of these efficiencies, because they're so dramatic. They're so huge. These the efficiencies that we're seeing that are going to come in from GPT and from robots and whatnot, these are going to happen quickly. These are not going to take decades for us to see these efficiencies. When we get robo-taxis, the efficiencies are going to be dramatic and quick. So these kinds of things are going to drive down prices in the future. So I think that's what the market is now seeing. The market can also see that the labor thing has withstood the Fed actions, and that the layoffs are not happening. The unemployment numbers are still fine. We have a full employment, and so no soft landing, no recession. It's becoming, I think, impossible for people to see in their head any possibility of some kind of a hard landing or some kind of a really bad situation in the third and fourth quarter of this year. It certainly hasn't happened yet, I don't think, based on any of the numbers we're seeing, except transportation. That's the only one that keeps popping up, that we're seeing less traffic and less loads, less total tonnage. All right. So if the labor market has withstood the tough Fed actions and we're not going to have a recession, then the money that's been stuck in bonds and money markets and cash is going to start coming back into the marketplace. Well, if it comes back into, there's so much of it, maybe the most in history in terms of investable money sitting on the sidelines waiting because it doesn't know what to do with it. And that would tend to be coming back in probably, into equities. It's not going to go into commodities as much because commodities are depressed now. So probably going to come back into equities, and that's going to create a bigger bull. I have some recent conversations with people who thinks this could be a crazy bull. This could be really a big deal. We've had a very long bear, and so it could be a very big bull. All right, let's turn around and talk about Tesla for a minute. But first, I do want to highlight a friend of mine. She's a friend, she's a co-author, and she's also now my client. Her name is Shaila Chamberlain, and she's a CPA. This is a kind of an advertisement, by the way. It's not a paid ad, but it's kind of an ad. Shaila is a CPA, and she has tremendous skills in both tax and business accounting. I met her about 5 years ago. I was so impressed with her skills as an accountant that I suggested to her that we should write a book together about business accounting. I've always believed that most business people hate accounting. They don't understand bookkeeping. They don't understand their reporting when they get their reports from their CPA. They don't know how to read a P&L, and so they don't know how to make changes in their business based on that. And that was the book that we wrote together. It's called Making Money Out of Thin Air, because if you know how to read your financial reports, then you can literally make money without making changes that cost you any money. So most companies could make money just by having a competent CPA provide them with outstanding reporting and then analysis. So Shaila is also a CMA, a certified management accountant, and that gives her the skills she needs to be able to give that kind of analysis. Anyway, a few months ago, I started also helping Shaila build her CPA business as part of my consultancy. And maybe you own a business and maybe you're sort of unhappy with your CPA. Maybe you're thinking just what I said, that they give you some numbers, but you don't really know what to do with them. And you would love to have a CPA that could help you analyze those numbers, analyze the financials. Well, that'd be a great reason to call Shaila at 951-768-2969. Or maybe you don't own a business, but you do need a tax preparer. Your taxes are a little complicated. You need somebody to help you prepare your taxes. Well, she's done mine for 3 years, and she's the best that I've ever employed. So give Shaila a call at 951-768-2969, and I'll put the information below in the comment, in my description below. Okay, let's get back to the story. The Tesla narrative is there's no longer any negatives. That's one of the narratives, is that there's no longer any negatives. In other words, for about 6 to 9 months, Tesla had a bunch of negatives in the narrative that were putting chinks in its armor, because basically Tesla was like going to the moon because there were no negatives. And then all of a sudden, boom, 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 we don't have to list those negatives again. They're gone. They're just completely gone. So those things have stopped. And now there's potential for Tesla to surprise and beat on so many items that it's hard to contemplate what happens to the stock if just a few of those happen. Let's go through it. This will be crazy. Listen to this. We got the Highland. We got Cybertruck. We got the Mexico factory. We got the semi. We have energy. We have a new partnership with legacy makers, and maybe more partnerships with legacy makers. We have the potential to beat on revenues, to beat on units, to beat on sales, to beat on margins, to beat on profits. And then on top of all of that, we've got Robotaxi and our Optimus, which could make huge news and really drive the stock crazy later this year or early into next year. Then there's the ever-present idea, because it's happening all the time, that Tesla will announce new products And not just the Dojo as a service product that we're hoping for, or the HVAC, which I'm waiting for, but other products that are not even on our list right now, because that's how Elon thinks, and that's how Tesla has been ever since it's been in business. So this is beginning to be seen. I believe that the investing class is starting to get it. There are no negatives. There is already a bunch of products that are that are now selling well and making profits. There are new products like energy that is going like crazy. There's potential products that are some of the biggest products in the history of the world in terms of sales and potential profits. And then there's these massive to Optimus and Robotaxi on top. I think the market's beginning to understand that. I think that's the narrative change. I think that's what's taking place. But remember, I'm going to take a way deeper dive into all of this tomorrow morning. So make sure you see that show. All right. So what about specifics today? This is Wednesday. This is when I talk about what's really going on right now. So oil was up a tiny bit. It's still in the low 70s. But when you understand that Saudis just reduced output by 500,000 barrels a day, that is very telling. What we might be seeing is that oil might be beginning to have some demand destruction due to solar wind battery and BEVs. At some point, when you're putting in this much solar and this much wind and this much battery and these many BEVs on the road, oil is going to start to see demand destruction. There's going to be less need for oil. And maybe we're beginning to see that. Kathy Wood, again, I know I talk about Kathy almost as much as I talk about Elon now, but I just believe that Kathy knows what she's talking about. I think she's really smart. And I think that she believes right now we've already seen demand destruction. So I think the oil thing is, does that mean it'll never go up for a week or a month, or, we have a hurricane or something that knocks down some of the oil production in the Gulf? Sure. But in general, I think we're beginning to see, we've seen peak oil and maybe peak oil pricing. Bond yields were up today, and they were up pretty strongly, and they've been up for about 2 weeks in a row now. You've seen this continuous up increasing in the yields on bonds. This is probably due to in part to movement of money out of bonds and into equities. All right. That dries out some of the cash available to buy bonds, which means the bond cost goes down, the yields goes up. The Treasury is also issuing bonds again after the credit cap was lifted by the Congress. So for a couple of weeks there was not a lot of bonds being offered out there. So you had a lack of supply, and that would drive the price of the bond up and hold the prices more level. Well, now that's reversed. Now the Treasury will be out selling bonds again. You'll have more supply. That will increase that will create a lower cost of the actual bond, which drives up the yields. All right. I think this is an area to watch. I would watch if the yields continue higher. It could be a signal that some think the Fed is not done raising interest rates. But as I noted, I think it is more due to a rotation into equities. All right. There's no news coming tomorrow or Friday in terms of reports and things that anybody cares about. So what I think will happen on Thursday and Friday is people will begin to position themselves for the reporting next week, because man, it couldn't be any bigger than this. That's why. So we got the CPI, the PPI, and the Fed meeting next week. It all comes down to inflation. That's why I did the video this morning on understanding how the Trueflation.com page works, so that you can look at that page and get a head start on what's going to happen next Tuesday, Wednesday, because that's going to be the biggest 2 days in maybe a month in terms of the overall market. If we see inflation dropping under 4% month over month, I think it'll drop under 0.4% month over month. We might even see it drop to, say, 3.3 month over month, which would give us a 4% year over year. So watch for that. That's going to be big. It will, if we get a beat on this, if the market is happy with it, if the Fed is happy with it, if the Fed doesn't raise on Wednesday, all of that's just going to mean that, that's an impetus for the market to continue this surge. And then Tesla will, of course, go along with that surge. So one last thing, the Tesla Highland, I mean, everybody's talking about the Highland. almost everything that you're seeing right now. They get sightings of the Highland. We've got rumors about the Highland about Shanghai being shut down. So, one line in Shanghai being shut down so they can start making the Highland. We had other rumors that they're already shifting over to the Highland in Fremont. Lots of conversations about what the price might be, what the look might be. So basically, the biggest thing about the Highland seems to be this look where the front end looks a little bit more sports car like. People are saying a little bit more like the Roadster. That would be a very good look. We haven't really seen it yet, but it could be a very good look. That could really stimulate Model 3 sales. And if the price is good, price comes down a little bit more. I don't think it needs to, but if the price came down a little bit more, it'd be great. So if all that happens, hey, maybe my 2.2 million number this year could be a reality, because adding a few more Model 3s into the overall totals this year could drive it from, say, a pretty easy 2.1 to just 100,000 or more. Could be Model 3s, gets us to 2.2. Anyway, we'll see what happens. That's all I got for you today. This is Randy Kirk. If you liked, hit like. If you hit subscribe. If you haven't subscribed already, you definitely, I got Larry Goldberg on tomorrow afternoon. You're going to want to see that one too. It's a crazy show. That's one of the most fun shows I've ever done. You're going to want to see that. So hit notify. And then, of course, Patreon's always an option. Hit that, go down into the comments. By the way, I don't know if you know that in my description, I show as many of the different shows that are coming up. You can take a look down there and say, okay, that I would definitely want to see that one. You can put on your calendar or just hit notify. Anyway, it's been great talking to you.